Nvidia stock is crashing by more than 15% this morning as a rival AI software from China threatens the spending of big tech on products from Nvidia, wiping hundreds of billions of dollars of wealth from retail investor accounts. But the big question remains, why is Nvidia stock crashing, and is this a buying opportunity? I'll address both of those questions in this video, so let's jump in. I quickly wanted to let everyone know about this great offer for my channel members at the investor tier. You can gain access to my spreadsheet containing my ratings on over 130 stocks. I update this spreadsheet with multiple times and multiple changes per day, Monday through Friday. Additionally, channel members at the investor tier can get access to my spreadsheet with my discounted cash flow valuations, and I update this spreadsheet multiple times per week with multiple new companies added to this spreadsheet with discounted cash flow valuations. There's already dozens on the spreadsheet available now. You can get all this plus early access videos, plus member exclusive videos, plus priority response to comments, all for less than $15 per month. So what are you waiting for? Hit that join button below and start experiencing the benefits. As I shared with you in the introduction, Nvidia stock is down by over 15% on the back of this news. Nvidia stock has lost hundreds of billions of dollars of market capitalization in just one day. In fact, if you look at Nvidia's stock price performance over the last 5 days, it's fallen from a market cap around 3.6 trillion all the way down to a market cap of 2.95 trillion. Large numbers indeed, and it highlights the riskiness of investing in tech stocks like Nvidia. Of course, I'm disappointed in this development because I've had Nvidia stock rated as one of my top stocks to buy in 2025. In fact, I had it rated as a top stock to buy last year as well. 2025 is getting off to a rough start for Nvidia stock investors. But why is Nvidia stock down by so much today? Well, the semiconductor market is leading a broader sell-off in tech stocks after DeepSeek, which ignited a low-cost approach to developing AI models, and it reignited concerns that big US companies have poured too much money into developing artificial intelligence, since the Chinese firm appears to provide a comparable performance to Western chatbots at a fraction of the price. So if you haven't been following along, big tech companies like Microsoft, Alphabet, Meta Platforms, Amazon, etc., have been pouring tens of billions of dollars into developing their AI capabilities. That's partly what's fueling Nvidia's success up to this point, is these large tech companies are buying up everything Nvidia can produce. So this news threatens those purchases. That's why the stock price is down, because investors are making a connection, thinking to themselves, well, if this company from China can develop this technology at a fraction of the cost, can US tech companies mimic that result and thereby develop the similar technology at a fraction of the cost? And if they're developing it at a fraction of the cost, the large percentage of that cost goes to Nvidia. So that means that money that's going to Nvidia will not be as much. And so Nvidia's future cash flows are threatened. And if you remember, when I did my discounted cash flow valuation of Nvidia, part of the reason why investors are so attracted to Nvidia stock is because its free cash flows are expected to surge over the next decade, rising from 46 billion in free cash flow in 2024. My model and my forecasts, which incorporate Wall Street analyst forecast, suggest that the company's free cash flow could rise in the next 5 years in 2029 to reach $451 billion. up from $46 billion. So a roughly 10x increase in Nvidia's free cash flow is expected over the next 5 years. But if Wall Street feels that Nvidia's customers are going to reduce spending, this forecast in free cash flow growth could shrink. And if this forecasted free cash flow shrinks, then Nvidia's valuation also shrinks. And so that's the big risk. That's what has Nvidia stock crashing by more than 15% on the day of this announcement. And if you look at Nvidia's third quarter, which is its most recent quarter, if you look at its data center revenue compared to total revenue, now data center revenue for Nvidia is where it makes sales for artificial intelligence categories. So this is where Nvidia would be hurt as a result of this news. If indeed companies like Amazon and Microsoft and Alphabet reduce their spending in the data center segment, this is where Nvidia will be hurt. And it's a big part of Nvidia's business. $31 billion in data center revenue from a total of $35 billion. So it's almost 90% of the company's revenue. So the market is right to react this way to this kind of news because it threatens a large part of Nvidia's business and a large part of where Nvidia's business is forecast to grow over these next 5 years, over these next 10 years. So given this decline, Nvidia stock is now trading at a forward price to earnings of 27, which signals to me that it's still undervalued. Additionally, if you look at my discounted cash flow valuation model, Nvidia stock still looks relatively cheap compared to my intrinsic value per share calculation, which forecasts that Nvidia's free cash flows will grow significantly over the next decade and more, and the intrinsic value per share is around $300. I also did several scenarios of Nvidia in this discounted cash flow where its growth rate could be as low as 3% instead of the 5% in my base case longer term. And even in that scenario, its intrinsic value would be $270 per share. So what's my conclusion? Is Nvidia stock a buy on this dip? Is this a buying opportunity? Well, I think it's too soon to come to the conclusion that tech companies like Microsoft and Amazon and Alphabet are going to reduce their spending in these data centers optimized for AI because of this news from DeepSeek. My usual reaction to big moves in the market is that stock markets overreact, both on the upside and on the downside. And so this downside reaction, I think, is an overreaction to this news. But it does bring me to higher alert on Nvidia stock. I'm already paying close attention to Amazon, Microsoft, and all these companies that are spending money on data centers. And the recent news, if you remember, I covered with Microsoft, and they said they're increasing their capital expenditures to $80 billion in 2025, up from $50 billion in 2024. So they actually increased their CapEx budget by 60%. Similar story with Meta Platforms, similar story with Amazon, and we're going to get earnings releases in the next week where these large tech companies are going to announce their quarterly results. And of course, Wall Street analysts are going to ask this question to those big tech companies. They're going to ask this question to Microsoft, to Amazon, to Alphabet, and say, look, you guys are spending this much money to develop AI when this Chinese company did it at a fraction of the cost. Explain yourselves. And that's when we'll get the really critical information to digest and to make a decision whether or not this is really going to impact Nvidia, right? If Amazon and Microsoft and Alphabet all come out and say, look, yeah, that's great what they did over there, but they wouldn't have been able to do that without the initial investments, and they may have made great progress to start with, but they're going to get stuck because they don't have this technology. Whatever the reasoning might be, if those large tech companies say, We're not going to change our spending plans. We're going to continue developing. And even if they can develop this technology at a fraction of the cost, the offsetting factor might be huge as well. The offsetting factor could mean, if you think about this in the next step, the second derivative of this outcome, if you can develop this kind of AI technology at a lower cost, and these companies were already spending so much money on AI at the higher price, imagine how much they will want to spend on AI if they can develop AI at a lower price. Imagine all the extra use cases that now become financially viable because the return on investment is so much better. And so you're going to have this initial reaction where there's fear that these large tech companies are going to decrease their budgets for AI. But then if you think about it, usually what happens with technology is a lower price to develop technology creates increasing demand for the technology. So now you can develop these capabilities at a lower price. And if you can develop these capabilities at a lower price, now your imagination starts to think more broadly and think more expansively, and you start to consider, man, I can do this now because the cost is lower. I can develop this new technology because the cost is lower and the return on investment makes sense. So the whole calculus will change, and it'll create more opportunities for new investment that now makes sense from a return on invested capital prospect. So I think it's too soon to make any kind of conclusive change in my recommendation. So I'm still reiterating that I still think Nvidia stock is a buy, but put an asterisk there to be more cautious because the big tech companies, Microsoft, Amazon, Alphabet, will be reporting over the next couple of weeks. And that's when we'll get definitive answers as to if they're going to change their spending plans as a result of this news. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.